This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, now let's take a look at the gold market. In the gold market, in fact, the picture is almost similar to the euro currency. Since yesterday was the holiday in the United States, we see the small price action on Monday. So in fact, was inside trading session to the Friday one. On Friday we have got the bearish stop grabber pattern that we have discussed, and that has, I suppose, the minimum target is around that lows. But as I said, for the gold market, for the nature of this market, it will be quite uncommon if market will reach these lows to leave intact that lows, because gold market is the market of the wash and rinses, of the stop grabbing, and of the different kind of the punishments for the traders. That's why if market will continue to move lower, I think hardly we could hope that market will leave these lows. We should be ready, if of course downward action will start, we should be ready at minimum to the wash and rinse of these lows, or even for the further downward continuation. Because if market will show the wash and rinse, it's clearing out of these lows and returns right back above this line, that could lead potentially still to the bullish pattern, to the double bottom. Because for the double bottom patterns we have discussed many times already, it's very typical when the second bottom clears the stops around the first bottom. That's very typical for the modern markets, not only for gold but on the other markets. This is just absolutely common picture when that happens when the second bottom is a bit lower than the first one. That's the first scenario. Second scenario is, as I said, just a continuation, because here you can see that market's forming some kind of the bearish flag pattern. This could be treated as the flag. Based on this pattern, market could show some ABCD to the downside or something of that sort. But the one thing that worries me with this scenario is that market is heavily oversold on the monthly time frame, and it will be very difficult for the market to continue move down somewhere significantly below these lows. That's why the appearance of the potential double bottom here looks a bit more probable, that it has a bit more odds on its favor. But as we have discussed in our weekly research, that gold market mostly is driven by the fundamental factors, the mass outflow from the gold market in other assets, and these fundamental factors could dominate over the technical moments. And when the fundamental factors impact on any market, in the gold market also, in this case, for some time the technical moments, technical indicators, technical issues on the markets could be a bit pressed by the fundamental moments, and from that point of view maybe market could show some deeper move, I don't know. But since we mostly should deal with the probabilities, well, I can't put the bet and advise to hold short position too extended below these lows, because it will be rather risky from the technical point of view. Anyway, that's a bit extended future, and for a nearest perspective we mostly should be focused on taking out of these lows and how it could happen on the gold market. That's our first target. If market will reach it, after that we start to think about what to do next. But currently we should be focused on the potential downward continuation, or conversely on erasing of this potential setup and market start move to the upside. Almost the same as on the euro currency. Here the picture still holds bearish, since market has not erased this small stop grabber pattern. Wherever it small, you consider it's rather small candle, but market hasn't taken out of these highs yet. This was very shallow inside action. In general, you can see within the 4 trading session market stands in the range of this Wednesday action, when the FOMC meeting has happened in the previous week. Now market stands inside of this action. So now for our bearish setup, we need to see downward starting of the downward action on the gold market. On the 4-hour time frame, in fact, we have the same pattern as we said, this butterfly. The same as on the euro currency, I think that we should be focused on the 161 extensions around 1290, since, as I said, below these daily lows, that's orange line, is the lows on the daily time frame. Well, below this low stands a lot of stop orders were placed. That's why market will hit 127. It will trigger the stops, and they will let market to reach 1618 extension 1290 this area. That's why if market will start to falling down, in this case butterfly starts to work, then we should be focused on the 1618 extension of the butterfly rather than 127. On the hourly time frame is on the euro currency again. It's our major picture, major time frame to work with. What we have here, that's the swing high of the stop grabber. Until this high holds, the stop grabber still intact. Now market starts some splash down and starting to move to the downside. Well, there are two possible solutions could be offered here. First one is the to deal purely with the stop grabber. In this case, you could enter short with the stops above this area. And the second, a bit more conservative tactics, is to wait the breakout of the major support lines. First line to watch for, as we said, weekly pivot point. So if market will move below it, it will shift sentiment on the daily time frame to the bearish side. You can see this pivot point stands in the same area as the major support line of the flag stands. They are crossing somewhere during today's trading session. And if market will break them both and move to the downside, this will be very solid bearish confirmation on the market, that market starts to move to the downside. That's the second tactic. So you could wait for the breakout of these levels and then apply some shallow retracement to enter. Maybe this will be some sort of the retesting. So the market will break these areas, retest them from the other side, and continue move down. That's the second way how you could possess yourself on the short side of the market, because dealing with the stop grabber will be a bit risky, because now in fact you can see that market hasn't started the downward action yet, and anything could happen. But here you have tighter stop probably, and you will get the better entry point. But when the market starts accelerates down, you will get the more confidence that downward action will have started. But where you will enter and where you will place your stops will be a question, because we do not know how market will behave after the breakout. If it will start falling like a stone, probably will have the limited possibility for entering short. That could become difficult to enter short, to catch the right moment to enter. That's why, as you can see, it's really something to here this issue where to enter to think about. So maybe it makes sense to apply some scaling. So trying to enter short with the stop grabber with a small position when the market starts acceleration, you could put your stop this, based on this position to the break even, and try to add more to your position on some retracement. That's also the way how you could try to possess yourself on the gold market. So you can see a lot of different possibilities that it be personal and depending on your risk management, your trading style, and generally your treatment of the current situation. But here's the moment to watch for. We need the confirmation of the downward action, although potentially patterns and overall market action holds the room open for the bearish development, but no signs of it yet. So market now still stands flat because Europe is still sleeping now. We probably should see some more action within the nearest couple of hours. So let's see how it will turn, and you could decide how you will act with this current setup. Because if market will start move to the downside, this real move could be really significant, and risk reward ratio from this trade could be really impressive.